some point in time, with just the magnitude of the amount of bonds the U.S. Treasury has to sell because of our incredible debt, and I know I'm using these hyperbolic terms, they belong in here. This is a dramatic time. The market might not have the taste for our bonds anymore if there is just this endless supply of them coming out. But I think what the takeaway is going to be is that I think there's going to be a time where the Fed quietly or loudly steps back into the bond market and starts supporting the bond market again so yields don't go too high to the upside. When that happens, I think we might not see it in the actual dollar index or the pairs, but we will see it in gold, silver, copper, platinum.
This is Little by Little with Andy Schechtman.
All right. Welcome back, everyone, to another episode of Little by Little, the show where we try to make sense of this crazy financial world, one conversation at a time. Today, we're getting real about the Fed, about gold, about what be coming down the road. And joining me is someone who's been in the trenches for years and even on the board of trade in Chicago. I watched him this afternoon, and he's someone who calls it like he sees it. He's a trader, a market commentator, co-host of the Futures Edge, co-host with Bobby Icino. We had Bobby on, one of the first guests that we've ever had on, one of the best interviews I've ever done. And Jim Iuorio, how you doing, buddy?
I'm doing great. You know, it's so funny is that I am so defensive about my height. When I saw the show was called Little by Little, I thought when I was just you putting that in there for me, I was like, oh, we're already enemies.
No.
But then I realized
you've had several broken noses as a result of not being able to shut up. At least that's what it says on your X page.
If it says it on the internet, then it must be true. Oh no, it is true, actually.
One of the questions that I asked Bobby way back when was, back in the open outcry in the board of trade, when everything was kind of more of a, let's say, a gentleman's market, tell me about it. And he said, things were settled either with a handshake or a fist. And so I'd love to hear some of those stories. And I suppose before we jump in, why don't you tell me a little bit about yourself and give me a story about being on the floor. I know you're still there now, a much different experience today, electronic mostly, than it was back then. And as a side note, I had a guest on not too long ago, and he's 6'10", and he said that was why he excelled on the board of trade. How about you? You say you're not as tall as you'd like to be. Give me a story about being on the floor and maybe any challenges about, open outcry when you maybe aren't the tallest guy on the floor.
There's a couple funny stories about that actually too. Back in the 90s, when I was in, I believe it was the British pound pit trading currencies, I had special shoes made. It cost at the time $300. And they literally, I took a pair of gym shoes and they put on bottoms that were literally about 5 inches tall. And I'd walk into the pit with these. And I remember some old guy going, those should be illegal. He shouldn't be able to wear them. Somebody's going to get hurt. Dude, I'm not going to get hurt. As a matter of fact, I'll bet you $500 that I can beat you in a game of one-on-one basketball wearing these and you wear your shoes. How about it? And everyone heard it. And he's like, whatever. I guess they can stay. But as far as the 5'8" thing is going, when you walk onto the trading floor in 1987, as I did, as a 5'8", 150-pound guy, and you look around these pits, you realize that you have to be loud or you have to be mean and you have to make people scared of you, which, by the way, I think I accomplished that for a long time, but nobody's scared of me anymore. I think they look at me now like, well, that little old man, what's he going to do? Which is kind of really irritates me. But I've been in 2 physical fights on trading floors. Who else, in what other business can you slug it out with someone and then not you have any interruption of work, be back the next day? One guy worked for me. And I remember because there was a guy who worked for me and tempers came and I actually got a broken rib from the whole thing. But I had told my wife that I had fallen and hit a chair. And she bought it completely because I didn't want to tell her I was fighting with one of my coworkers. It seems so stupid because it is. And then about a month later, my daughter, who was 8 at the time, overheard me on the phone and someone was ribbing me about getting my ass kicked, whatever, too, which, by the way, that guy who I was fighting with was on Vicodin for 2 weeks afterwards. But anyway, I'm not saying that I needed to win. But anyway, my wife goes, wait a second, you got in a fight at work and that's why you couldn't breathe for a month? Like, yeah, and my daughter was like, well, you fired the guy, right? And I was like, no, of course I didn't fire the guy. He's a good employee. Why would I fire him?
See, that's the thing. You know, boys hug it out after. I respect that. Do you know Greg Weldon?
Oh, sure. For sure I do.
Yeah.
Yeah.
And so Greg told me the story. He came to visit a friend down on the floor, and someone said to him, you know, you're so damn tall, you'd be good at this. And that's the person I was talking to. But no, that's cool. I often think of how cool it would have been to be on the floor. Our mutual friend Joel brought me down to the floor right before it went completely left the open outcry. And I remember having a cigarette with Rick Santelli. I smoked a half a cigarette by the time he smoked 3, and then he walked back in and he stood on a milk carton on a milk box to do his deal with CNBC. So hey man, whatever it takes, whether it be enhanced shoes or a milk carton, get your point across. That's cool. Well, I'm very glad to have you here, Jim. Already you've brightened my day and made me smile with your energy, your stories. I was watching you just now on your live stream with Bobby, and I learned some stuff about you. And it's good to have you here. So thanks for coming here.
Yeah.
Let's just dig right in. I got a couple questions for you. Macro scope. You know, the Chinese have a curse saying, may you live in interesting times. And I think these times are rather interesting for sure.
Amen.
What is it on your radar screen right now that folks should be paying attention to? And it can be anything, but typically I'm talking on a macro scale, but it can be anything that you think is important.
So I think something, and by the way, I don't know when this show's going to air. It's not live, right? Or is it live?
No, it'll air within the next couple of days, though.
Okay, good. So, because we're talking now, what day is it? Wednesday? Yeah, we're talking Wednesday.
21st of May.
Yeah, today we had a long end auction in our country, which comes the day after Japan's horrendous auction yesterday. Right. We have an auction today that goes very, very poorly. And that's why the stocks turned around and started heading lower. I think this is a big deal. Moody's can downgrade us all they want. The markets don't give a crap about Moody's because Moody's looking at the same information that everybody else is. U.S. Treasuries are the most overanalyzed asset, not just in the world, but probably in the history of the world right now. So the fact that Moody's downgraded us means nothing. Now, we have an auction, and that auction goes very poorly today. That means something. And I think it's the market just saying to the new administration, you guys came in, you promised to cut spending, you haven't cut spending at all. Now we're not, and again, this isn't the end of the world. It wasn't a failed auction. I don't think bond yields are going through the roof quite yet, but it was the beginning of what could be a big deal. And that's why everyone was pulling back risk today. But I think ultimately, and that's why I love that this show is about metals too, because I don't know if you know this, but I'll tell you, the last 3 years, my number one pick to click, I've given about 10 different speeches on it, was gold. And one of my base cases was that at some point in time, and this has been evolved over the last year or more, some point in time, with just the magnitude of the amount of bonds the U.S. Treasury has to sell because of our incredible debt, and I know I'm using these hyperbolic terms, they belong in here. This is a dramatic time. The market might not have the taste for our bonds anymore if there is just this endless supply of them coming out. But I think what the takeaway is going to be is that I think there's going to be a time where the Fed quietly or loudly steps back into the bond market and starts supporting the bond market again so yields don't go too high to the upside. When that happens, I think we might not see it in the actual dollar index or the pairs, but we will see it in gold, silver, copper, platinum. Those things will go through the roof. I don't know if you noticed, platinum today shot through the roof, and that's one of my dollar hedge longs. And I think that's part of a commentary saying that if the world doesn't want our treasuries, that could be a bad thing. Yields could go through the roof, and I think things that are commodities will do better in that environment. Stocks might do well in that environment too, but only after we can get used to the new world of the Fed back in buying. Does that make sense to you?
Totally does, completely and totally. And you kind of pulling a thread out of my own playbook. One of the things I was going to ask you was, I in doing a little bit of research and following some of your tweets and whatnot, I noticed you say the Fed isn't telling us the truth. I agree. They say they're not doing QE. And to your point, last week, it seems to me that quietly, even though they're not calling it QE, they bought $20 billion in 3-year treasuries, 34.8 in 10-year and 8.8 in 30-year. Now, I guess we'll find out to what degree, if at all, they came in and bought a little bit today. Again, not QE, whatever they want to call it. But it appears as though they're not telling us the truth. Is this shadow QE? Is it something worse?
So here's how I'll answer that, is that if they told us they were doing QT, quantitative tightening, and they told us they were selling 50 billion a month, and I'm just making up numbers here to prove my point here. So they said they were going to be selling 50 billion a month. If all of a sudden they quietly changed that to 25 billion, in my mind, that's a movement towards QE. And I know even within the realm of it's still quantitative tightening, because they would be still shrinking their balance sheet, but not at the rate we thought they were. So even that is kind of the beginning of a move to easier money. And I saw the same thing as you, that they either were or weren't, depending on who you talk to, quietly buying bonds again. We did see an auction that went very well, I think 2 weeks ago. And the rumor mill was that, okay, maybe the Fed was back in buying it. Well, and if they were, I don't see why they wouldn't have bought today, because today they kind of like get away from them. But that is one thing I'm looking for. I'm looking at the Fed's balance sheet. And if they're going to be honest with us and the Fed's balance sheet starts to go up again, in my mind, that'll be the trigger for gold moves more, which, by the way, the gold, can we talk more about the gold trade too? Because I think there's
Absolutely.
some other.
I got a bunch in there for you with gold, 100%.
Okay, and I don't mean to just be ranting, but I sometimes.
No, I like it, man. That's what this is all about. I have all sorts of different guests from all sorts of different places. And quite frankly, I've been doing this for 35 years. And some of the most astute people I've ever met in this industry have roots, let alone still planted in the Board of Trade. So yes, we will definitely get to gold. I have one more question to ask you about the rates and about the Fed before we get to gold, and we can go as deep in the woods as you'd like on gold. I own a precious metals company and have been doing this for 35 years. So while we maybe come from different parts, I think that we will connect quite beautifully on the way we look at gold. I've been following your work, and I think we see a lot of things the same way. So I got some questions to ask you, but so let's just, personally, I believe that the inflation numbers are fugazi. I think the CPI is the CPI, and the Bureau of Labor Statistics just pull the L out of that and just call it the bullshit, because they pull out the food and the energy and the housing and all of these things, and the numbers they don't even put in, they should put in taxes, the single biggest cost to working family, but they don't. And the numbers that we are led to believe seem to be heading down, even though the cost of living seems to be heading up. And really the big problem here is rates, especially when it appears as though there's lackluster demand for our treasuries, let alone central banks net not buying anything new since 2014. Right. All right. So with all that being said, do you think the Fed could actually raise rates without breaking something if inflation were to really kick up again? Or they just had no choice but to try and protect the costs of everything as rates or as inflation is going through the roof? Are they stuck? Are they going to break the market if rates rise much further from where they are now?
So I think to answer your question was that if inflation started to rear its head again, and I'm talking inflation above 2.8 to 3%, even in the CPI, because I agree with you that it is such an antiquated and ridiculous measurement, but it's what the market reacts to. So let's pretend for this conversation that it's accurate. If all of a sudden we saw inflation start to shoot higher again, I think the Fed would be in a position where it had to raise rates, and I don't think they could do it without breaking something. I think the market would throw up its hands and go, crap, we've weathered this for a couple of years. Things are getting worse, not better. These things are priced poorly. I'm talking about risk assets, and they would sell the crap out of it. That being said, I actually think that there's some other things at play here that are helping with the inflation. And by the way, I think it was understated completely. I have a restaurant in Palatine. Our expenses over the last 3.5 years have probably gone up about 45%, while the government is telling us they went up 25%. So it is complete crap. It's just not the right numbers. That being said, right now, we're saying we have 2.4% inflation. That's the last thing the CPI told us. I don't think it is shooting up above 3% because I think the supply chain being locked up was one of the biggest. It was the trigger that all this money being put in, then all of a sudden sparked inflation. And now we have two things that are working in our favor. One, crude oil has been very, very subdued. So whatever reason the Saudis are for keeping prices lower. Maybe it's they're afraid of Donald Trump. Maybe they want him to succeed. Either way, I don't care if I'm the beneficiary of that. But the other thing that I think is gathering steam and could be disinflationary, which is obviously, different than deflationary, is productivity increases that are related to AI. I know so many people who I speak to now who are like, oh yeah, AI is making my job so much easier. It makes part of my job, the writing and preparing for different media outlets, makes that job a lot easier for me too, even though I hate the product they give me. But it's having someone look over my work and feeding it AI and saying, no, maybe if you said it this way. By the way, when you guys read an
I
article,
was just listening to you talk about that 10 minutes ago.
right. And if you read an article that says it's by Jim Iuorio, it is. Sometimes Grok and I get in arguments because he changes my words to stupid words. But anyway, so those two things I think are going to keep inflation from exploding higher. I hope I'm right on that. That's my thesis.
Yeah, I agree with that. I think it will be very disinflationary. My son, who now works for me, can't graduate out of the Ross School of Business, went right out to Manhattan as an accountant, got a CPA, was getting paid 75 grand a year right out of college to analyze a real estate investment trust balance sheet. And you could just see the handwriting on the wall. What do they need to pay a kid 75 grand for with benefits and whatnot, when they can have AI do it in 10 seconds? It's going to change the world, no question about it. All right, let's move to gold. And I think there's a lot to talk about with gold. There's something odd going on with gold. In fact, in the 35 years I've been doing this, I've never seen anything quite like it. The influx and the flow of gold into the COMEX is unlike anything anyone's ever seen in this industry. We've become net importers of gold. For example, on the May contract, last week, 16,000 contracts have stood for delivery at 100 ounces apiece. That's $5.3 billion worth of gold. And this has been going on every single month, month over month over month. We're at almost an 800% increase over this time last year for the month of May. It's the single biggest inflow ever into the COMEX for a month here in May. And it just seems that that's the rhetoric we keep hearing every month. In March, we had a client of JP Morgan's, have $4 billion worth of gold delivered into COMEX. Who's got this money? Is it the Treasury? Is it the Fed? Who knows? The question is that with gold flowing into the U.S. at record levels, you would never know it if you just watch CNBC or Fox or any of the mainstream. What do you think? Why do you think no one is talking about this, and what do you think it means?
Okay, so first of all, the reason that no one's talking about it, because I've shouted about these kind of things from the rooftops, and it doesn't seem like anyone wants to talk about it in legacy media. I don't know why. The only thing with CNBC is that I think they're rarely looking at the right things. And again, I spent 25 years with them. There's a lot of people there who I really like, but I think the hype of certain things, when they choose a topic to talk about, it's not about what could actually be of huge value to people. It's about what they think will generate the most buzz. Okay, that's just the model that they work in. Okay, now it's you and I. We're trying to get to the actual brass tacks. So you've seen, obviously, I'm not telling you anything, but people who might be, the last 3 years, we've seen global central banks accrue gold at rates not seen in 75 years. It really started to accelerate when we froze Russia out of the SWIFT payment system and froze up all their dollar-denominated assets. So by the way, you can, if you're political out there, I don't care. But one thing you have to acknowledge is that if we are to be the arbiter of global trade and the stewards of the reserve currency, that the market might look at us with a side eye if we start freezing up people out of the system because we don't like what they did. And I don't like what they did. Okay, so anyway, so Russia, India, China, all of a sudden starts buying a crap ton of gold. And they have not really stopped. And even like into this year, Poland has been a huge net buyer of gold. But anyway, to answer the question about domestically what's happening, I'm not certain. It could just be that non-traditional accruers of gold look around this planet and say, there is some things that look a little bit unsettling. What are the assets we should have? I like Bitcoin, as I've said a million times. I barely understand it. But when I know BlackRock's behind me, or I'm behind BlackRock, I have no problem getting with an asset when they're there. And gold has been one of my favorite longs, and it continues to be. I did think there was a little curveball that happened over the last couple of weeks. I thought if we were going to actually negotiate trade deals part of those trade deals would be, if it was with China or Japan, was that also, by the way, you guys got to start buying treasuries again. And Donald Trump has done this kind of thing before too. And if that was the case and they did start accelerating their treasury buying, I think it could have hurt gold. But I think that was part of that multi-week weakness that actually in the last couple of days seems to be reversed. So perhaps that's not as strong a theme as I thought. And I did use it to put some hedges on that. I lost money on the hedges, but I'm fine with that.
Yeah, I saw the Japanese finance minister said even selling the trillion in treasuries is on the table. And it seems as though China has been selling treasuries as they've just slid to number 3 in our treasury holdings behind the UK, which I find crazy. It's like two drunk guys holding each other up. The 2 largest debtor nations are buying each other's debt. It just seems silly to me. And I agree. You mentioned Poland, and I want to read something to you because again, you and I would love to sit at your restaurant with a bottle of scotch and talk, talk off the record with you. Amen. Because we, I think, see things very similarly, and I aligned with your thinking. One of the things I found really interesting, and you're right, the central banks, which is a question I'm going to ask you in a moment, have been buying at levels no one has ever seen. And if you really go back, you can see it. They started doing it in 2017, 2 years before the BIS started talking about moving gold up to a tier 1 status. But what's interesting also to me along those same lines also is the amount of repatriation that we've seen out of the Bank of England and the New York Fed to bring it home, over 40 central banks, removing that counterparty risk, as you alluded to, with the sanctioning of the Russian treasuries, or as far as I'm concerned, the defaulting of the Russian treasuries and using the proceeds to give to the Ukraine. One of the things that I found incredibly interesting, you mentioned Poland, they have been one of the biggest buyers in the world, was a comment that recently came out from the head of their national bank, Adam Glapinski. And he was talking to reporters about the massive amount of gold that they had accumulated over the last 2 years, and talking about they've entered this exclusive club of the world's largest gold reserve holders. And he announced plans actually to get to 20% of the country's holdings, and they've exceeded that now. I think they're north of 22%, and I don't think central banks make those mistakes by accident. I think they're continuing to accumulate. Anyways, one of the things that he said that I've never heard a banker say anything like this. I'll read it to you. I'd like to get your take on it, especially in regards to Bitcoin. He says, why does the central bank own gold? Well, because gold will retain its value even when someone cuts off the power to the global financial system, destroying traditional assets based on electronic accounting records. Of course, we don't assume that this will happen, but as the saying goes, forewarned is forearmed, and as the central bank is required to be prepared for even the most unfavorable conditions. That is why we see a special place for gold in our foreign exchange management process. After all, gold is free from credit risk and cannot be devalued by another country's economic policy. Besides, it's extremely durable and virtually indestructible. I mean, I don't know about you, but when I hear that, my mind wanders a little bit. I wasn't planning on asking you this question, but do you have any thought on that?
I do. Well, first of all, I'm going to say this is that I am never going to tell any Polish light bulb changing jokes anymore, because that's pretty. And by the way, I'm from Chicago. Everybody I know is Polish and they're not mad. So please don't you guys get mad either. Anyway, so that is pretty astute. And I think what he's alluding to is what the U.S. government has done. And by the way, the Russia thing was not the first instance of the U.S. government flexing our muscles and to try to punish someone in the monetary system. To put a point on what you just said, you mentioned the year 2017. In 2016, 64% of global central banks, global countries' reserves were held in U.S. dollars, and assumption is U.S. Treasuries. That number's gone down to 56%. And the rest of it, and everyone's like, well, where's the money going? Well, clearly the money is going into gold. Probably some of it is going into digital assets, potentially Bitcoin as well. But the gold thing has become a big deal. Now, I do not believe in the de-dollarization thing, that we're moving away from the dollar is going to lose its reserve currency status. But I don't care. That's the wrong question. The question is, do enough people around the globe think that that's a possibility to start planning for it? And that's how we can make money in the gold market, which I have so far. So that's the real question, is, are people going to believe in the de-dollarization story ahead of me? All I have to do is try to capitalize on what they are thinking. That being said, if we go into any sort of global stress again, and we have in our lifetime several different times, I defy anyone who thinks that people won't start buying the dollar and U.S. Treasuries. Mike Tyson always says everyone's got a plan till they get punched in the face. No one's been punched in the face in a while. And when they do, I still think they'll buy dollars. But in the meantime, I plan on riding this gold thing pretty well.
Well, you would know, according to your Twitter, you've been hit so many times in the nose that you are an expert.
I say
your words, not mine. I laughed when I saw that. I think, I think that was priceless. Well, before I get to the question on the central bank, let's talk about a central bank. The ECB just came out with something last week or just a couple of days ago, warning, and I quote, gold could undermine the regional financial system. And they're talking, this is talking about the leverage that we see on the LBMA. And as an example, with silver, they have a float roughly of about 300 million ounces. They trade 290 million ounces per day, basically the entire float. But they admit to that number being 10 times understated, as it only posts the final settlement numbers. In essence, that number could be 2.9 billion ounces per day, 3.5 times annual global mine supply, 10 times the float. Okay, with that being said, the ECB warns gold could undermine the regional financial system. The gold market may pose a threat to the financial stability of the Eurozone, especially in the context of geopolitical tensions. ECB experts identified, and here's where it is, risk factors including high demand for physical gold. These are all the deliveries that we're seeing. The dominance of large traders, the big 8 commercial banks that seem to dominate the market, and insufficient transparency of transactions. What are your thoughts?
So when people talk about gold ETFs, whether it be the GLD or the Sprott gold thing too, I always try to point out that these are trading vehicles. Okay, you do not own gold if you own the GLD, because that, like you just said, the risk is that there's not enough gold to fit all these paper contracts. So in order to really be long gold, to truly be long gold, I believe you need to be long physical gold. And then it comes into how you're going to store it. Do you have guard dogs? Do you have guns? And by the way, like, I'm not even trying to be funny when I say those things, because if people know that you have, $1 million worth of gold in your home, you could become a target. So, but I will say that unless you own the gold, there is, because again, what did you say earlier in the show about gold? It's about counterparty risk and about eliminating counterparty risk. And when you have it in your hand, there is no counterparty risk. But there's obviously storage concerns. But GLD, those things, although even my friends at the CME, I know that you can take delivery. If everybody takes delivery, though, we could be in a pickle. I still say that if you want to be long real gold, you be long real gold.
Yeah, there's no question. If everyone took delivery, we would be in the pickle based upon the rehypothecation. And that's one of the things that I find interesting, is the change in the market seems to be that we see so much in the way of delivery instead of rolling it or taking the paper proceeds.
By the way, can I ask you a quick question?
Please.
Your gold company, do you deal in physical, right?
Yes, we do hedge everything, however.
Sure, but like, do you sell to institutions or to the general public if they want to buy gold?
That's what we do. Yes, we did in the last 2 years, pretty darn well near $2 billion in physical sales.
Seems like a lot of gold there. Nice.
Yeah, it is. It's a lot of gold. Been doing it for 35 years. And we do less to institutions, although some more so to, individual households. We also have storage locations around North America with Brinks, to your point, safety and logistics, especially when we get to silver. I do have a question about that in a moment, of course.
Yeah.
You mentioned central banks, and we're seeing them buying it like it's going out of style. Even with real yields moving up, gold is still rallying. Is this just about inflation? I don't think it is. Or is gold sniffing out something bigger? And before you answer that, we've become a net importer. You have Scott Bessent saying that in this administration, he expects to see a new Bretton Woods. Judy Shelton, who I had on this show, was his nominee in 16 for the run the Federal Reserve, although wasn't certified. She may be it this time when Powell's tenure is up, and she's advocating for treasuries backed by gold, redeemable in gold, starting with the 50-year treasury. And it's interesting. She told me on this show flat out, Jim, she said, Trump has told me that on July 4th, 2026, he will issue gold-backed treasuries, redeemable gold-backed treasuries, and that they would issue stable coins off of those, or she would think that that's where things would go. But she said in no uncertain terms he's told her that. Now, again, a lot can happen between now and then. So my point to you is, do you think gold is quietly working its way, maybe being slowly reintegrated back into the financial monetary system, whether it be just here in the United States or even globally?
Two-word answer for that is hell yes. And the reason is that I think what's happened over the last, like we can say since the financial crisis, but for expedience, let's just say just since 2020. I think that the average person in finance looks at the way fiat currency has been treated all over the globe. And that's not just in our country. The knee-jerk reaction of everybody was to flood the market with liquidity, flood the market with new currency to save us from whatever happened in 2020. The rise in gold and the rise in Bitcoin is absolutely a no confidence vote. It's probably hyperbolic, a less confidence vote in stewardship of fiat. So to your point is, yeah, real yields are nice and lovely and people are still buying gold. So there's something that's running deeper. That's something that's running deeper where people think that there has to be assets. And by the way, we've seen it in real estate too in this country too, particularly in pockets of attractive real estate, that there's money in the system looking to hide out, and gold is on the list of where it is hiding out. But as far as what Poland says is that, that someone like it's a low risk. I don't agree that it's a low risk trade. I can't remember what the man's words were, but I don't agree that it's a low risk trade. All of a sudden something can happen. It can reverse around and we could push all the longs out. By the way, you have to be prepared for that. And I have hedges on as well, but I think the gold trade is still intact, provided we don't get any kumbaya moment with global trade where everybody shakes hand, be it China, India, Russia, everybody shakes hands and says, now we're all friends again. Then there might be less of a reason to hold gold in the short term. And then market position might force a bit of a correction. But other than that, I think there's absolutely a bigger wave that we're riding here.
Yeah, and Trump's tweet on Easter Sunday, the golden rule of negotiating, he who has the gold makes the rules. Thank you. Wondering what that was all about, but it all seems to be connected together to gold, something bigger happening in the gold market than perhaps just tariffs or arbitrage from the Bank of England. And just one other point I'd like to get your point on, and a question following. The Bank of England, or the LBMA, is a T+1 settlement, and they've now moved to a T+4 to 8 weeks, citing a shortage of trucks and a shortage of manpower to move the bars. Do you buy that?
Liars.
Yeah, okay, good.
Yes.
Good. Right. And that's my point. There's stress because of all of these deliveries. As someone who's made his career, and I can tell you were on TV before, because you have a way of being very succinct with your answers. I go forever, and if I'm on TV, they're going like this.
You love when those producers in your ear going, wrap
it up. Right. Well, no, you're very good at that. You make your point very succinctly. I like that. You're a trader. Do you ever, with your, you've been bullish on gold, do you ever own any and buy it and hold it for your family, your kids, your future? Or is everything about trading?
No, everything is not about trading. In 2006 or 7, when the storm clouds were gathering, I sent out a text to like 10 of my closest family members, friends. I said, because I had a partner who was so brilliant. I'll even mention his name. His name is Alex Manzera. And he explained to me exactly what was going to happen in the financial crisis. And he said it day after day. Now, we didn't make a penny because, as is it Keynes who says, the markets can stay irrational longer than you can stay liquid. And we didn't stay with the trade as long as it did. However, the gold portion of it, gold was trading about $600-700 an ounce. I sent out a text to my friends and family saying, just buy physical gold. There are storm clouds gathering. This is going to be a very, very uncommon sort of economic disruption. And guess, by the way, I'm going to pose a question to you. Of the 10 people I sent out that text to, guess how many of them actually went and bought physical gold? None is correct. Because they text me back going, okay, how do I buy physical gold? I'm like, God damn it, that's what Google's for. You know what I mean? This stuff, people pay me a lot of money for this sort of opinion. Just go and do that.
I heard you say, all you guys say you don't use Google anymore. Tell them to use ChatGPT.
Back then you used Google.
Right? No, I get it, man. That's been my existence forever. It's because, if you're telling someone, hey, the sky could be coming down, it's not as fun as, hey, you make a lot of money, go buy a new Ferrari. So I get it, but I think it's a noble cause. And I was just curious for the mentality. Just a couple more questions for
Sure.
you. You're a fascinating dude, man. I wish I would have had you on before, but I'm glad that you're here. There's we've talked a lot about gold, but then there's silver. And a lot of people, myself included, would argue that it's the most suppressed asset out there, and for various reasons. We can get into it or not, but do you buy that narrative? And if it's true, could a breakout be coming? Do you see anything on the horizon with silver?
If it's coming, I think today was a big day because both, by the way, if you overlay the charts of copper and silver over the last, I think it's about a year, they are trading in lockstep, which means to me that silver right now, because it sometimes oscillates back and forth between, is it a precious or is it an industrial? And I think the fact that central banks were all buying gold, and you can correct me if I'm wrong on this, but they weren't really buying silver very much. So I think that sort of narrative in practice kind of made the trading world throw silver in with the industrials, with the base metals, and it's trading in lockstep with copper. That being said, both copper and silver, this is May 21st on a Wednesday. Both of those look like they were breaking out of a range today from a technical standpoint. And as you know, and I'm telling the other people watching too, is when net gold silver ratio blows out to where I think it's over 100 right now, right? So up until 2017, the gold silver ratio averaged about 60. From 2017 to 2024, the gold silver ratio averaged about 80. And now we're at about, I'm going to guess 102. And I haven't looked at the exact numbers today. But when silver tends to catch up, it tends to catch up fast. So that's something. And I think for me, that's going to be like an option strategy, because I think it's going to be as much about the direction of the move as how quickly it could potentially accelerate, if that makes sense to you. So I may do some sort of ratio call strategy where if it starts to accelerate high, then I start to gain deltas. Oh, I lost your audio. Can't hear
There we
you.
go. I want to show you something.
Sure.
If I can do this here, just to get your opinion. And what we see, the red line represents the four big commercial banks on COMEX. The green line represents the four plus the other four, the big 8 banks.
Okay.
And those are the short positions on COMEX. And so you have the largest concentrated short position of any commodity traded in silver. And second is platinum. We saw platinum move up yesterday, nearly 7%. It's up again today. Do you think that's a short squeeze? Is that the kind of violent action that we would see or would expect to see in a short covering?
I think in platinum, it seems like the answer to that is absolutely yes. Which, by the way, just because it's a short squeeze, and you know this too, doesn't necessarily mean that the fundamental story isn't changing as well. You know, we talked about the Fed potentially back in supporting bond market. I think that would be very inflationary in non-traditional ways, and it could show up in platinum, silver, copper, etc. So I think it partially is a short squeeze, partially it's a fundamental shift. Either way, you know, platinum is something I'm quite long as well, and it's not been as great a long as my gold and copper longs have been over the years. But that's something I'm watching very well. So I do think, and silver, by the way, so it's probably a long gold, short silver pairs trade that's been going on a while too, that's bumped out that spread. One of the reasons when it revert, and by the way, I don't have any inside knowledge on that. I'm just surmising. And if that starts to unwind, the silver move could be relatively violent. That's why I'm long silver and plan on being longer.
You heard it here, folks. Jim has inside knowledge on all this stuff. No, I'm teasing you, man. I'm just fucking with you. So last question before I ask you how people can find out more about what you're doing, because you've really piqued my interest in becoming more of a follower. You know, I've always thought Bob was a great guy, but the two of you together are I think people need to watch your show. That's for damn sure.
Appreciate that. Thank you so much for that.
Yeah, no, you're an interesting guy, and I do hope our paths cross in person. If you ever come down here to Florida to meet Bob and to see our mutual friend Joey, I would drive across the state because he's on the other side and come meet you.
I will for sure.
That would be great. Please let me know. All right, last question. You know, we've talked about inflation and interest rates and liquidity, and I don't know. It just seems to me, Jim, that something bigger is shifting under the surface. Are we entering a phase in your mind, and maybe not, it's okay if not, where trust in institutions, central banks, governments, even markets themselves, like the bond market, are becoming the core driver of capital flows into gold and other real assets? And if that's the case, if you had to take a guess, where does this go for the rest of the year?
Well, by the way, I'm going to answer this question in a way you probably don't expect. I hope it is a reflection of a lack of trust in some of these institutions, because I am not certain that they've ever really deserved our trust as much as they had. And by the way, U.S. Treasuries are still, I was about to say the gold standard, which is ironic to call it the gold standard. The U.S. Treasuries are not something I want to be selling out of. Okay, I still believe that the Treasuries have a spot.
Even those of duration, or are you just talking short term, 3 year and under?
I don't own any duration now. I own everything I own. And by the way, something kind of funny. I've been an interest rate futures trader for 30 years, and it was like 2.5 years ago when the rates started going high and the short term rates were like 5%. I'm like, oh, I'm going to buy some Treasury bonds. I was like, hey, dude, how do you buy Treasury bonds? I literally had never bought a Treasury bond before. I've traded the future for 30 years, and I figured it out pretty quickly. But I do not own any duration, but I do own a lot of things that are 2 years and in. I think, like I said before, and I'll say it again because it bears repeating, I think the movement in Bitcoin and the movement in gold are the globe saying, we do not like the way you guys are running your financial systems. And every time there's a little bit of a hint of a recession, you flood the market with liquidity, potentially hurting your own currencies. So I think there is mistrust, and I think that mistrust is very, very appropriate. How's that?
Yeah, man, that's awesome. That's awesome. Dude, I got to have you back on my show again. This has been a fascinating conversation. I really do appreciate your insights and your candor, and coming from someone who's been in the trenches as long as you have. I hope people really listen and go back and replay this and listen to what you're saying. There's great wisdom. I often say to my son, who's a genius, I say, you may be smarter than me, kid, but you're not as wise. That comes with gray hair and experience. And
Amen.
What you are bringing here is a lot of experience and wisdom. I hope people listen to it, honest to God. For people to find out what you and Bobby are doing, and maybe even drop in, and I don't know if you want to share the name of your restaurant in Chicago, sure, but to do these things that people to check out what you're doing and to check out your restaurant. Even if I were there, I would. What's the best way for people to do that? So
first of all, the restaurant. If you're interested in Chicago mob history, my restaurant is a place you have to go. It is steeped in it. It was a centerpiece of a war between the Capone gang and the Roger Toohey gang back in the 1930s for control over beer making in the northwest suburbs, and my restaurant. But anyway, where to find me? First off is at Jim Iuorio on Twitter. That's JimIuorio. The two things that Bobby and I are doing, more than two things, but the two main things we're doing: the Futures Edge show, which we release on Twitter. Please subscribe to our YouTube channel. It's the Futures Edge podcast on YouTube. That comes out once a week. It's 70% financial and economic, but we do kind of branch off sometimes into things like general physical health, sometimes politics. We've had Vivek Ramaswamy on, sometimes things that are related tangentially to economics. The other one is called Trader's Edge. It's a product from Tradier, the brokerage house. That's live Wednesdays at 4 p.m. Sorry if I talk too much, my friend, but
no, dude. I mean, as far as I'm concerned, I'd like to keep on going, but out of respect for your time, knowing that this is a back-to-backer for you, I watched you on a live stream right before we started. I'm going to respect your time and say I've thoroughly enjoyed this, honestly, and I'd love to do it again. And I wished I would have had you on sooner, but
thank you so much. I'd love doing it anytime. You're fun to talk to. This is a great show. Thank you so much.
Thank you, brother. Absolutely. You stay well, and look forward to picking up where we left off.
Little by Little with Andy Schechtman.